I've been investing for 9 years, and as a data professional, I know that the numbers don't lie. The data is pointing to an investment that's quietly surging, and I just feel not enough people are talking about it. But let me show you what's happening. Hi, my name's Kevin, and I'm a civil engineer turned data professional in the fintech space. And just to pull the rabbit out of the hat, we're talking about ETFs here. And even if you know what they are, stick around because this video might still prove to be helpful. But for those who aren't particularly sure what ETFs are, they stand for exchange traded funds. I'm just going to read the by the book definition here, so that there is no room for uncertainty. But basically what it is an investment fund that holds a collection of assets such as stocks, bonds, or commodities and trades on stock exchanges. So some of the key features or advantages of ETFs are, one of them being diversification. And what that obviously does is just reduce risk of actually investing. Let's say if you invested into one stock, being Amazon, and Amazon plunges all the way down, then you are exposed to all that risk. But now with an ETF, because you are diversified across different stocks, that mitigates that risk. Another advantage is its liquidity. And what we mean by that is it can be bought or sold throughout the trading day, obviously at market-related prices. A third advantage of ETFs is its cost effectiveness, and they've been known to have a much lower expense ratio compared to mutual funds. And what we mean by expense ratio is just basically the investment fee. I actually touch on more on this expense ratio concept in this video right there. Oh yes, and don't worry, I'll leave all the links in case you want to read more on what I'm speaking about today. So that'll be in the description. But let's get into a bit of the evolution and even where ETFs started. So they were first introduced in 1993. They only started gaining traction from about the 2000s, early 2000s. And as of 2024, actually the ETF market has reached an AUM, or assets under management, of approximately $13.8 trillion, just to give you an idea of the amount of liquidity that this specific asset has. So now what's actually led to this ETF surge over the last couple of years is the tech boom. Actually, my field, really proud. But basically the tech boom, we're talking Nvidia, we're talking Microsoft, we're talking Meta, but yeah, just the tech companies. And what these tech companies have actually done is, we're talking maybe the last 10 years or so, but they've changed the game of expected returns per year. Before we were talking 8 to 10%, but now 15 to 20% is not unheard of anymore, or even more than that. And investors such as you and I, so not big firms, can have exposure to these tech companies in a safe way through these ETFs, instead of investing yourself through, let's say, an Nvidia on its own, which can be quite a lot more risky than, say, investing in an ETF that has Nvidia as one of its stocks. Another fact that just shows the rapid growth of ETFs is right here. I'm going to read that in 2024, US-based ETFs attracted over $1 trillion in inflows, right? This actually broke. This actually broke all previous records. So now why I particularly love ETFs is because gone are the days where you had to analyze financial statements, understand things like PE ratio, etc., to actually make an educated decision on, is this investment, is the stock correct? But now beginners can actually just, look at this ETF, see its performance over the last couple of years, and I'm going to take this, I'm going to invest in it. And the nice thing is ETFs they have this dynamic nature of, they are managed by a fund manager, and they can actually increase or decrease the percentage of that stock. They can take out a stock, they can introduce a new stock. So they do all the hard, heavy lifting, and all you do is just watch your returns grow. Just the second reason why I love ETFs is because it gives you exposure to a diverse range of markets. So not just tech, but things like healthcare, energy, utilities, you name it. So just to read a couple of more facts of what makes ETFs really cool, and that is this is as of May 2024, so about a year ago. Basically, there were approximately 3,500 ETFs listed in the US, managing around $9 trillion. That's not a billion, that's $1 trillion in assets, accounting for nearly 70% of the global ETF assets under management. And that's from JP Morgan. Another fact is the number of ETF offerings globally has risen to 9,149 funds, reflecting their growing popularity. And that's from the State Street Advisors. But again, I'll share all the links in the description. Now, talking about the growth projections of the ETF global market, and that is it's expected to reach $20 trillion in 2028, and that's about 13.8 trillion up from August 2024, so 13.8 trillion more than it was in August of 2024, and that indicates a compound annual growth rate of about 12%. Just to show that this ETF market is compounding in itself. And with that being said, ETFs, low effort, good investment, but it doesn't necessarily mean a low cost, right? So even with ETFs, the investment fees can actually really eat into your investments. And if you want to know about the fees on investments, you can check out this video